It's 11:47 p.m., January 22nd, 2026. The markets closed hours ago. Most people are asleep. But if you knew what I was staring at right now on my terminal, you wouldn't sleep either. While everyone's been obsessing over silver-breaking psychological barriers, while the financial media fills airtime talking about Fed policy and crypto rebounds, there's a metal sitting in plain sight that's about to rewrite the global power structure, and almost nobody is watching it. I'm a private commodities analyst. I've been tracking critical materials flows for 15 years, and I built this channel because I got tired of waiting for mainstream outlets to catch up to what's happening in real time. Tonight, I need to walk you through something that's been building quietly in the shadows for months, something the Pentagon classified as a national security priority 3 weeks ago, something that makes silver look like a sideshow. Here's what I'm claiming, and I'm going to prove it to you with data they don't want you to see. Neodymium is no longer just an industrial input. It has become the most strategically critical element on Earth, more important than oil, more scarce than gold, more manipulated than silver. And while retail investors chase precious metals rallies, the real power brokers are quietly cornering a market that most people can't even pronounce. This isn't about price speculation. This isn't about technical analysis or chart patterns. This is about recognizing that the global economy now runs on a metal that 87% comes from one country, a country that just cut export quotas by 15% while simultaneously signing exclusive supply deals with Russia and Iran. While the West scrambles to electrify everything from cars to power grids, the source material for that entire transition is being systematically restricted. We are looking at what I call the neodymium choke point, and it's tightening faster than anyone anticipated. Let me give you the baseline data first, because if you don't understand what neodymium actually does, you won't grasp why this matters. Neodymium is a rare earth element that creates the strongest permanent magnets known to science. Without these magnets, wind turbines don't generate electricity. Electric vehicle motors don't turn, hard drives don't store data, speakers don't produce sound, military guidance systems don't navigate. It's embedded in everything we consider modern technology. Now here's the choke point mechanism. China controls 87% of global neodymium production, not 50%, not 60%, 87%. That's not market dominance. That's a functional monopoly on the nervous system of the 21st century economy. And 3 weeks ago, Beijing quietly implemented what they're calling resource optimization quotas. Export permits for neodymium dropped 15% year over year, effective immediately. But here's where it gets dangerous. While China restricts supply to the West, they're simultaneously signing long-term exclusive contracts with strategic partners. Russia locked in a 5-year deal for defense applications. Iran secured mining rights for their nuclear program. North Korea negotiated technology transfers in exchange for rare earth access. We're not just looking at supply restriction, we're looking at geopolitical weaponization. And the timing isn't coincidental. The Biden administration's renewable energy mandates require a tripling of wind capacity by 2030. Each offshore wind turbine needs approximately 600 kilograms of neodymium for its generator magnets. Tesla's production targets for 2026 alone would consume 8% of current global supply. The EU's Green Deal transition plan assumes unlimited access to materials that are anything but unlimited. Let me run the math that keeps Pentagon strategists up at night. Global neodymium production is roughly 31,000 tons annually. Projected demand by 2028 is 47,000 tons. That's a 51% supply deficit, even if every existing mine operates at maximum capacity. But here's the trap. Developing new neodymium mines takes 7 to 12 years from discovery to production. The lead time exceeds the demand timeline by half a decade. This creates what military planners call a strategic dependency cascade. As neodymium becomes scarce, the cost of electrification skyrockets. As electrification stalls, carbon reduction targets become impossible. As targets fail, ESG compliance becomes voluntary. As compliance fragments, the entire green transition narrative collapses, and all of this hinges on access to deposits that are 87% controlled by Beijing. Now let me show you what's happening in the shadow markets while everyone watches silver. London Metal Exchange doesn't even list neodymium futures. There's no transparent price discovery, no regulated exchange, no margin requirements. It's purely an over-the-counter bilateral contract market, which means the real price isn't public information. But I have access to industrial purchasing data. 3 months ago, neodymium oxide was trading at approximately $180 per kilogram in spot transactions. Last week, I saw confirmed deals at $340 per kilogram. That's an 89% price increase in 90 days, with zero mainstream coverage, zero retail awareness, zero discussion in financial media. Because this isn't a retail tradable market. This is a strategic resource allocation system. The Pentagon knows it, the Chinese Communist Party knows it, General Electric knows it, Tesla knows it. But somehow individual investors are still debating whether silver will hit $100 while missing the elephant in the room. Let me address the skeptics directly, because there are legitimate counter-arguments to the strategic scarcity thesis. The strongest objection is technological substitution. The bears argue that high neodymium prices will accelerate research into alternative magnetic materials. They point to developments in ferrite magnets, samarium cobalt alternatives, and theoretical breakthroughs in synthetic magnetic compounds. Here's my rebuttal. Physics doesn't negotiate. Neodymium magnets aren't expensive because of market manipulation. They're expensive because they deliver energy density that's 3 to 5 times higher than any known alternative. When you're designing a wind turbine that needs to operate in harsh conditions for 20 years, or an electric vehicle that needs maximum efficiency and minimum space, there is no substitute that meets performance requirements. Yes, alternatives exist, but they're heavier, weaker, or less durable. In aerospace applications, weight matters. In renewable energy, efficiency matters. In consumer electronics, miniaturization matters. The entire technological trajectory of the past decade has been built around neodymium's unique properties. Substitution isn't just an engineering problem, it's an infrastructure rebuild problem. The second skeptic argument is recycling capacity expansion. The theory is that as prices rise, recycling becomes economically viable and creates a secondary supply source. This sounds reasonable until you examine the metallurgy. Neodymium recycling requires separating rare earth elements from complex alloy matrices. The chemical process is energy-intensive, environmentally problematic, and yields are typically 60–70% of input material. More critically, recycling can only work with existing supply. You can't recycle neodymium from products that haven't been manufactured yet. And the demand explosion we're facing comes from new applications, offshore wind farms, electric aircraft, grid storage systems, that won't generate recyclable waste streams for 15 to 20 years. Recycling is a long-term solution to a short-term crisis. But this isn't the real problem yet. The real problem is that neodymium shortage doesn't just affect neodymium prices. It affects everything downstream. When wind turbine manufacturers can't secure magnetic materials, wind energy projects get delayed or canceled. When EV companies face supply constraints, electric vehicle adoption slows. When the energy transition stalls, carbon pricing mechanisms collapse. This creates what economists call systemic cascading failure. The shortage of one critical input brings down multiple interconnected systems. And right now, that input is controlled by a country that has explicitly stated its intention to use resource access as geopolitical leverage. Here's my personal framework for monitoring this situation. I'm tracking 3 specific indicators that will tell us how fast this crisis is accelerating. First, Pentagon procurement patterns. The Defense Department has been quietly stockpiling strategic materials through obscure budget line items. If those purchases accelerate or become visible in public contracting databases, it signals that military planners expect supply disruptions. Second, Tesla's supply diversification announcements. Elon Musk isn't stupid. If Tesla starts announcing investments in African or Australian rare earth projects, it means their procurement team sees the Chinese dependency risk. Corporate actions speak louder than government statements. Third, Chinese export licensing delays. Beijing doesn't announce supply restrictions through press releases. They implement them through bureaucratic friction. If neodymium export permits start taking 6 months instead of 6 weeks, that's Beijing testing Western pain tolerance. My trigger for escalating concern is simple. If any 2 of these 3 indicators activate simultaneously, we're looking at a strategic materials crisis that makes oil embargoes look manageable. Oil has substitutes, oil has strategic reserves, oil can be transported from alternative sources. Neodymium has none of these options. Here's what I'm watching in my own positioning. I don't have direct exposure to neodymium prices because retail markets don't exist, but I am monitoring companies with secured long-term supply contracts. Rare earth miners outside China. Technology companies with vertical integration into materials sourcing. Defense contractors with strategic materials expertise. This isn't about picking winners in a bull market. This is about identifying which companies will survive supply chain warfare. Because that's what this is, economic warfare fought through resource access rather than military force. And most investors don't even know the war has started. The Beijing announcement 3 weeks ago wasn't random. It was coordinated with broader strategic messaging. China's National Development and Reform Commission simultaneously announced green technology export optimization and critical materials reserve enhancement. In diplomatic language, they're telling the West, your energy transition depends on our permission. And here's the elegant trap they've constructed. The more aggressively Western governments pursue renewable energy mandates, the more dependent they become on Chinese rare earth supplies. Every wind farm built increases leverage. Every electric vehicle subsidized strengthens the dependency. The green transition isn't reducing Western vulnerability to resource manipulation. It's creating new vulnerabilities to resource manipulation. This is why I believe neodymium represents a more significant investment thesis than precious metal speculation. Silver prices reflect monetary policy and inflation expectations. Neodymium prices reflect geopolitical power structures and technological dependencies. One is cyclical, the other is structural. The screen shows you silver rallies because silver futures are exchange traded and price transparent. The screen doesn't show you neodymium shortages because neodymium markets are opaque and access restricted. But opacity doesn't make the crisis less real. It makes the crisis less visible until it's too late to position for it. We are 18 months away from the first major supply disruption announcements. The math is inevitable. Demand growth exceeds supply capacity by margins that cannot be closed through efficiency improvements or modest price increases. This requires either demand destruction, meaning the energy transition fails, or price acceleration that makes current precious metals moves look conservative. The window for preparation is closing, not because I'm trying to create urgency, but because the underlying fundamentals are deteriorating faster than public awareness is increasing. By the time neodymium shortages become mainstream news, industrial users will have already secured available supplies at any price. This isn't about trading. This is about understanding that the global economy is transitioning from fossil fuel dependency to rare earth dependency. And 87% of rare earths come from one country that views resource access as a geopolitical weapon. The implications cascade through every technology sector, every renewable energy project, every electrification mandate. While everyone watches silver chase psychological price levels, the real restructuring of global power is happening in markets most people can't access and don't understand. The new gold isn't precious, it's strategic. And the countries that control it will determine which economies thrive and which economies struggle for the next 2 decades.